Do not take financial advice from me. I am not your financial advisor. I am not the person that you should be asking for major life financial decisions, okay? I have no formal training, no educational background, no certification, and I am not employed by any institution to give financial advice, okay? Destiny, if I could put 20,000 down, but I'm only required to put 10,000 down payment, should I just do the 10,000 and then invest the other 10,000 left? The dumbest fucking thing you can ever do is make a massive down payment so that you have a lower monthly payment on your house. The most financially illiterate people in the United States are people that shop around for low monthly payments, because a monthly payment means fuck all, okay? Monthly payment is totally fucking worthless, and it doesn't tell you anything about the type of loan or the value of the loan you're getting. These are the same people that will pay minimum payments on a $1,000 credit card balance and take 15 years to pay it off while getting raked with 26% fucking APR charges through the fucking ass, okay? The minimum payment or monthly payment is completely fucking relevant to anything, okay? Unless you're actually trying to qualify for a loan based on your monthly payment being a percentage of your overall income or whatever, more complicated bank math or whatever. But for the most part, you don't want to dump a large lump sum of money into the beginning of a loan that you're getting at sub-market rates in order to lower your monthly payment. You're always better off just throwing that money into some kind of safe fucking fund and just growing the money and then cashing it out after the 30-year loan. You'll always have more money that way, right? It's very relevant if you have no cash source and have to worry about meeting it. But if, no, that's what I'm saying. If you already have the money though, let's say that you've got $20,000, let's say you've got $10,000 and you think that if you put, what conditions would have to be met for that to be true? If you have, if you've got $10,000 and you want to go and get a mortgage, but you can't afford the monthly, you shouldn't be getting that loan anyway. Listen, if you're ever getting a loan and the monthly payments are going to break your back, don't get that loan. Get something else, okay? You might be right in like very specific, very rare circumstances, but normally you're better off just dumping the $10,000 into some kind of fund that will return you money and then cash it out little by little and fucking pay that shit off. Make it some kind of investment that's easy to liquidate, right? Don't do some exotically fucking weird shit or buy like 30-year fucking T-bonds or some shit. Not disagreeing, extra thing to consider would be the mortgage interest deduction you get. Potentially you could pay extra on the mortgage if you earned more than you expected that year to dodge some taxes. So the way that it works is you get mortgage interest. Is it a 1098-T? I'm pretty sure I just made all of that up. I just made every single number and letter here. Hold on, let me find out. Oh my God, Form 1098. It's almost like I do my own taxes. How do I know these things? It's not a 1098-T though. I think it's just a 1098. So you get a Form 1098 from your lender, the people that you actually pay money to, and this will tell you the mortgage interest that's received. Now, typically, if and only if, in order to get the mortgage interest deduction on your taxes, I believe you have to do the itemized deduction, okay? If you take the standard $5,000 to $6,000 or $10,000, whatever deduction you get for being a living, breathing human being, the itemized deduction of your mortgage interest, I don't think is even factored in your taxes. I could be wrong on that, but I think that mortgage interest has to come in on the itemized deduction, I believe. Yes, it's deductible and itemized. Okay, so, however, if you paid $2,000 in interest last year on your mortgage, paying more towards your principal is not going to let you save money on your taxes, right? Because the only part of your mortgage payment that is deductible on your taxes at the end of the year, if you're filing normal 1040s, now for business and depreciation or whatever, that might be something completely different. But if you're filing normal 1040s, you do not deduct extra principal paid on your tax forms towards your mortgage, if that makes sense. You can only deduct the interest part. So throwing extra money at the principal isn't going to help you on your taxes, if that makes sense. Technically, it only hurts you on your taxes because now that interest that you could be paying next year is going to be slightly less, but that amount is pretty negligible. If what I'm talking about sounds kind of complicated, it's just because I'm using big words. It's not smart. It's really not that complicated. You should really look into this and read all this shit if you haven't before, okay? All right, bye. Remember to hit that like and subscribe, and don't forget the notification bell so that my videos show up right in your feed.